Hi, everyone, and welcome to The Hash, where we bring you the latest and greatest in crypto and culture. My name is Naomi Brockwell, and we have a very energetic and enthusiastic Zach Seward, Will Foxley, and Jen Sanasi. Welcome to the show, guys. We're going to start off the day by talking about everyone's favorite thing, which is the latest inflation numbers, which have just come out. So we're talking about the CPI and what this means for crypto. So US inflation has risen to a 13-year high of 5.4%. Energy costs have soared by 25% in the last year. Economists were expecting the number to come in at around 5.3%, which would have been the highest rate since 2013. But the figure ended up being higher than it's been since 2008, right before the financial crisis. All of these things are not sounding too good. If you look at what's going on with international shipping in America as well, you've got a whole bunch of shipping containers right off the coast who are unable to dock because people can't find drivers to drive these goods and offload them. So the shipping has just slowed right down in the world. We've got supply chains being disrupted everywhere. What does this spell to all of you? To me, it spells that we all need to be having a backup plan because things don't look too good in the economy. Just something I wanted to start off the show by mentioning. The cheery little note, thank goodness for crypto, because this is exactly why crypto and Bitcoin in particular was invented, because you want to separate money and state, and you've had so many augmentations in the market due to the government that Bitcoin provides an out from that. So very, very grateful today, looking at these CPI numbers, that we have Bitcoin. Anyone have words that you wanted to add to that before we dive into our first story, talking about some interesting policy going on? Any thoughts, guys? You guys are so into the CPI. Luckily, my enthusiasm.
The tone you had. Yeah, your enthusiasm really helped us get through that really dreadful start to the show. So
Thank you so much, Jen. I appreciate that. Well, we're going to go. We're going to go straight to the next topic then. After just prepping everyone, letting you know what's going on in the economy. So, Zach, what's going on in policy?
All right, let's go to policy land. Let's go to crypto policy fights in Washington, D.C. And we have our players shaping up in this titanic matchup of the meeting is of the minds here, okay? We got Gary Gensler and the SEC on one side, and we got all of the bag-holding venture capital firms in Silicon Valley taking the other side. Right here, we have Andreessen Horowitz, perhaps the biggest of the crypto bag holders in Silicon Valley, saying, hey, we're going to meet with Washington policymakers. We're going to talk about the future of crypto, and we're going to talk about how they can regulate it in a way that works going forward. So this is really interesting. We've sort of seen dribs and drabs of this over the past few weeks, but now we're getting more detail as to what is going to occur here when we talk about crypto regulations in DC. I'm going to kick this straight to Will. I think it's interesting that we're seeing these players shake out the way we are, and that A16z of all people may be, the folks carrying the torch for the crypto industry in the U.S. going forward. What's your initial take on this story today?
Totally. There's been a lot of headlines this year that I did not see coming, and this is one of them. Silicon Valley is no friend of Washington, D.C., and vice versa. So I'm interested to see if there's anything beneficial that comes out of this meeting besides more mudslinging. Just kind of going back and looking at the history books. Washington, D.C. has always blamed Silicon Valley for problems in the U.S. economy or problems in U.S. social life. And Silicon Valley has always tried to push itself away, tried to say, we are creating new technologies that are benefiting everybody. I think we've mostly seen that very acutely with Facebook over the last few years. I don't see why the conversation would be any different when it comes to crypto. We've seen a lot of people be firmly anti-crypto, especially in the regulatory front. Maybe that there's some cooler heads that prevail. We are seeing some kind of lines being drawn up across political divisions. We've seen that Senator Ted Cruz was just down at the Austin Blockchain Council's meeting talking about Bitcoin mining and talking about other things pertaining to Bitcoin and saying hey, this is an innovation that we need to jump on and be pro for. If China's banning it, why are we not for it? I've also seen Andrew Yang has come out and said, hey, we need to be helping this technology. We don't need to be hurting it. But we also have people like Gary Gensler on the other side who are not big friends of it. So just to wrap up, don't have a lot of high expectations for this meeting. Jen, I'll throw it to you.
I also don't have high expectations, but I think the thought is there. I mean, Andreessen Horowitz have so much money. I know. They have so much money on the line, so this isn't surprising to me. I mean, they don't want to get into a situation where their investments are outregulated and then they lose the billions of dollars that they've been funneling into the industry. I think it's important to tell our audience what Web3 entails. It's not only financial services, but it's decentralized social. It's like a whole decentralized ecosystem. And this article was kind of funny to me because I was like, regulators haven't really figured out how to oversee Web 2 yet. And now we're going to introduce Web 3. And they've really been focusing on the financial side of it. So I don't really think they're going to be able to wrap their heads around it. I agree with the fact that we need regulation, but I don't think anything good is going to come out of this. But Zach, I'll pass it back to you.
I'll take it. You know what? I'm bullish on this. I think A16z has hired everyone in crypto. They know their stuff. They have Katie Hahn, who's a former U.S. prosecutor. I think if anyone is going to move the needle on this one, it might just be them, and crypto is just going to have to deal with it. It's going to be interesting to see if they can really get Gary Gensler's ear as he looks to establish a pretty tight grasp over the entire crypto regulatory landscape. So the fact that they have some seasoned pros, I think they added Brian Quintens recently from the CFTC. They've been building towards this moment, and the moment is now. And I am here with my popcorn, and I am ready to hear the latest dribs and drabs from what comes of this meeting. And I'm optimistic. They've assembled some key minds from both past regulatory seats, but also from the industry itself. We're going to see what happens, and this story isn't going away anytime soon. But it's interesting again to get a bit more detail on the players themselves. So that's my take. I'm bullish.
That's a good take. That's a very good take.
Man. Yeah, it was great.
Thanks, dog. Appreciate it. We're switching gears. Well, is this the switching gears silence?
This is the switch gears.
This is the segue.
This is the segue. Awkward
switch it.
I feel like, we've been doing this for a while. You should pick that up by now. But okay, let's talk about Bitcoin mining here on the show. So Stronghold Digital, a Bitcoin mining company, is looking to go public, and it's raising funds in order to do that, between $94 million and $106 million in an IPO, according to a filing with the U.S. Securities Office. So Stronghold is known for its clean coal mining play in Pennsylvania. What they do is they take waste coal, which is coal that's already been used, and they burn it again. And if you burn it again, you can do it more safely and better for the environment in general. And then they're just plugging in some Bitcoin miners on the side. They have plans to continue to expand their Bitcoin mining operation I think they only have about 3,000 machines at the moment, but they're looking to increase to a decent amount of the Bitcoin mining network by end of year, and then especially by December 2022. Just for perspective, right now, they don't have very many miners. 3,000 machines might sound like a lot, but it's pretty tiny. They want to move up to 8,000 petahash, which would be about under 1% of the Bitcoin mining network's total hash rate as of right now. By December 2022, that'd probably be even smaller percentage, but there's still a decent amount of machines. You can get a decent profit based on that. Interesting taglines just kind of coming out of this is that we're seeing more Bitcoin mining companies and just more Bitcoin and cryptocurrency companies in general moving into public markets in the US. So that's kind of my general takeaway. Not gonna lie, did not pay attention to whose hands went up. So someone can just grab that.
I don't think anyone's
Naomi,
hands went up.
I don't think anyone's hands went up.
Dang,
I mean, mining is not my wheelhouse. This is your wheelhouse. Well, no, it's interesting, but you're the go-to expert on all of this. So I just enjoy, hearing your take on all of this and what it means for crypto at large. So I'm, I'll throw it to Zach, but I would love to see you.
I'll take it. We got to take her. I'm going to go with context.
To the man on the
context note. I'm going to go with the context play here. So I think this is interesting. This news came out on the same day that some data from the Cambridge Center for Alternative Finance. They also released some data saying that the U.S. accounts for 35% of global Bitcoin mining hash rate, which is more than double of what that rate was at the end of April, which was obviously preceding China's Bitcoin mining crackdown. So you have these two things going on where all these Bitcoin mining firms are going public. They're hitting the public markets. You also have this thing where all of a sudden the US is like the top dog in Bitcoin mining. And it's been a couple months, and it's pretty crazy to say that, actually, right? Historically, China had been the player when it came to Bitcoin mining, and for that edict out of China's government to have such a drastic impact on how this network is being secured and from where, excuse me, is quite interesting and really, I think, lends weight and lends a lot of perspective as to why we're seeing all this public market activity for some of the bigger firms in North America in the space. So I don't know. I think those two stories are maybe related, but if not, interesting juxtaposition of the two here on this lovely Wednesday. I'm gonna toss it down to Jen. Jen, what's your thought here on this waste goal play? Talk about waste goal.
I mean, I didn't know how to think about this story. Like a mining company going public. Okay. The company itself was really interesting to me. I was reading that for every Bitcoin minted, I think 200 tons of waste coal is burned in this environmentally friendly way. I don't know, Will, do you know more about that? I thought that was kind of a cool aspect of what they do.
I am a coal expert, so I'll dig into this.
He's a coal expert.
I'm sad
you spent some time in PA. You spent some time up in like
I have.
the upper
coal
tier
country.
of PA. So that is some real stuff. Take it away.
Such an interesting character, Will.
Big time.
I know.
He probably is heating his house right now on waste coal. He probably just has coal out there. He's probably just firing up the heater on that spot. Anyway,
anything to help the environment. Yeah, no, waste coal again is just like your second burning of the coal. So there's tons of coal mines and coal power plants all across Pennsylvania, and there's actually been a underlying story throughout this transition from Bitcoin miners moving from China to the United States is that a lot of former power plants in the United States are booting back up to plug in Bitcoin miners. Why? Because a lot of these power plants are privately owned and people are sitting there with wasting away capital. And if you can like turn that power plant back on, plug in some Bitcoin miners, earn some profit, why not do that? In Pennsylvania, we've seen a lot of that with all these old coal power plants. Stronghold is kind of taking a different approach than those guys. The first group, probably not the most environmentally friendly thing you can do at the moment, just booting up a coal plant again. There's been a lot of criticism about that. But Stronghold is taking this already burnt coal, burning it again. It's more environmentally friendly and also disposes of that coal in the first place because there's a lot of just coal sitting around in Pennsylvania that was never burnt or it was burnt once and is just left in open air or wasn't disposed of properly. So they're kind of like knocking out two things at once. They're tackling the Bitcoin environmental problem and they're also solving a real issue in Pennsylvania, which I'm sure Zach is only pleased about.
No, yeah, as a Pennsylvania-based member of the Hash, I think it's interesting to see this. This is not in my neck of the woods here in PA, but it is interesting to see. And I remember like looking at this initially, kind of Jen, to your point, like, wait, waste coal? That sounds gnarly. And looking it up and like based on state regulators, it's like the same classification as like hydropower in the Commonwealth of PA. So it's clean according to at least some state regulators. So interesting to see that, but also this like vertically integrated mining stuff that we've been seeing a lot of. Like you own your own power plant. I think Green Age Generation is doing this in upstate New York and also in South Carolina, I think. So this trend towards like vertical integration in the mining sector, where you just like run your own power plant, also compelling to me. All right, we're gonna take a break. Let's take a break. Let's break it. Show me what I'm teasing. Hit me with the thing. Boom. Dapper Labs. Hit it with the T's. LOL. Go. Thank you, Control. Dapper Labs getting a little boost from KD, NBA superstar Kevin Durant. He's teaming up with Dapper Labs on a new thing through his boardroom initiative. We're going to talk about that after the break and so much more. It's The Hash. Thanks for being here. Couldn't do.
CoinDesk indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
Welcome back to The Hash, everyone. And we're going to dive into some interesting thing that's going on with Stripe. So Stripe is like an OG crypto company. A lot of people don't realize this, but way back in the day, 2014, they supported Bitcoin. Back during that giant boom where you had Microsoft accepting Bitcoin and you had, Overstock was getting into it. And like all of these companies were jumping on board the merchant bandwagon, and Stripe was there to facilitate it all. They stopped in 2018, and I'll read an excerpt in a moment from what they said at the time, but they've just announced that they're getting back into the game. They are hiring a team 3 years after ending Bitcoin support and diving back into facilitating Bitcoin transactions. So before I go into kind of what went on like 2014 to 2018, I want to throw this to the group. Your take on all this. Will, are you excited that Stripe is getting back into the game?
Changes my life a lot. So very, very excited. I actually want to hear Zach's take because he covers a lot of these Silicon darlings over the years. And it's interesting to see some of them jump into the pot and then jump back out. And now Stripe, maybe it's just FOMO, maybe it's just best practices for them as a firm, but interested to get Zach's thoughts.
My thoughts are basically on the production of this story because it's just funny. So if anybody wants to hear about how the sausage is made, I'm happy to complain about that. But this was a Danny Nelson scoop. He saw this. It was there. We had this ready to rock. He was reaching out to the company as we were in the process of getting our story ready. They tweeted it out. They just tweeted it out. And I'm just kind of grumpy about that. So shout out to Danny Nelson for finding this one. Scoop was a bit nuked, but still very notable development from another fintech player taking a serious look at crypto payments. I mean, it's interesting to see. This didn't seem like very Bitcoin-y. This felt like other stuff in crypto. This felt like Web3 payments specifically. So it's interesting to see the thinking evolve a little bit around what they're trying to do. Also, when they announced this yesterday, I think they issued like a NFT on Zora to kind of commemorate the launch of the Stripe crypto team. So interesting to see where their focus lies here, and also some interesting details in the piece as to Bitcoin support was ended in 2018. It was sunsetted, but it kind of like lived on. Like it's still supported in the API. Bitcoin is still supported in some of the Stripe API, which is a bit of new information that we were able to get on the record yesterday. That was quite interesting to me. But I definitely want to kick it to Naomi. I think the historical perspective here is really interesting. That here's a company who was really early, stopped in 18, sat out the most recent insanity, and is now back with a different focus and hiring in a significant way. So I'm very curious for your take on this.
Yeah, I think that when Stripe pulled support for Bitcoin, it was a tremendous blow. Like, I can't overstate how crushed so many people were because of everything that was going on at the time. So they said in their blog post at the time, our hope was that Bitcoin could become a universal decentralized substrate for online transactions and help our customers enable buyers in places that had less credit card penetration or use cases where credit card fees were prohibitive. Over the past year or two, as block size limits have been reached, Bitcoin has evolved to become better suited to being an asset than being a means of exchange. This has led Bitcoin to become less useful for payments. However, transaction confirmation times have risen substantially. This in turn has led to an increase in the failure rate of transactions denominated in fiat currencies. They went on to kind of explain the dynamics that were going on at the time while the Bitcoin block size war was still raging, and honestly continues to kind of rage to this day, although I wish people would just kind of move on to it and go in their separate directions on that side. But even at the time, they were looking at other alternatives. They said, we're interested in what's happening with Lightning and other proposals to enable faster payments. More broadly, Ethereum continues to spawn many high potential projects. We may add support for Stellar, to which we provided seed funding if substantive use continues to grow. And it's possible that Bitcoin Cash, Litecoin, or other Bitcoin variants will find a way to achieve popularity while keeping settlement times and transaction fees very low. So, at the time, there were the whole Stripe debacle. It really reflects what was going on in the ecosystem in this very nicely encapsulated blog post that they put out there. It was so exciting when they got involved in 2014. They were the first major payment provider to get involved with Bitcoin. I feel like we lost tremendous time by them stopping in 2018. Like, if we could have just kind of kept going at that time and really kept going with the momentum, and rather than just have everything kind of be crippled at the time, it was really devastating to see all these merchants pull out, and now to see them kind of slowly getting back in, but with other coins or with trying out Lightning. But we lost years. And during that time, governments have gotten stronger. They're figuring out, better ways to tackle this, regulations around it. They're kind of getting bolstered in terms of rallying around pushing back against crypto. So, yeah, disappointing to see all of this happen, but this is just the history of crypto. Zach, I did see your hand go up, so I'll throw it to you.
That was a really great find. I'm glad you read that. I mean, I think it's prescient in a lot of respects, right? Like, since that time, late 2018, the whole idea of Bitcoin as an asset as opposed to as a means of payment has really sort of continued to pick up pace. And I think we've sort of seen, we've seen that really play out over time since they were writing that, right? So it's interesting to see, again, that historical perspective. I think a lot of people are like, hey, this is new. And then you look at some of these timelines and you're like, oh, 2014, wow, they were really early on this thing. And then they've already been out of the game for 3 years after having it supported for 4 years. So it's interesting to have a little bit of that historical perspective. And it's going to be interesting to see which assets or products get onboarded here. I think they're very mindful not to mention any assets in these posts. You mentioned that post that included Stellar that pumped the price of XLM like 20% intraday when that came out back in 2018. So they're being more mindful about being sort of more tech agnostic here as they figure out what payments in the crypto context looks for, like what it looks like for a really big fintech company here in 2021. But I'll toss it back to you, Naomi.
Yeah, I will just add to what you were saying, Zach, when you said that people don't quite realize what was going on. I think a lot of people are looking at this and saying, oh, we're starting to gain momentum, with cryptocurrency. And we've already been there. Like, this has already happened. We had such tremendous momentum. 2013 was really the year for cryptocurrency adoption in terms of the merchant space. I could travel all over the world and find cafes where I could just buy it. And a lot of people don't realize that was actually a thing in 2013 when you had the price go from around, I don't think it was like $200, and then at the end of 2013 up to over 1,000. It was a giant boom across the world. And after that, 2013 so we got the crash, and then 2014 things started to crumble. We started to get the really deepening of the divide in the crypto space, and merchants started to pull out with just transactions not really being feasible and starting to get more and more expensive. So it just is interesting for new people to the space to realize that we have had these tremendous momentum events in crypto historically. This is not a new thing, but it is interesting that kind of history is now repeating. Stripe's getting back in the game, and we kind of have a new iteration now. Things have evolved and matured. So we'll see what happens this time. But Jen, I'm going to throw it to you for the next story. But before I do, I'll throw it to Zach for final words there.
Just tiny little quick thought. It's going to be interesting to see if stablecoins are a big part of this play. I think like in crypto payments 1.0, there was all these native crypto assets that sort of suffered, or depending on whether it's a feature or a bug, but had more volatility than some of these stable assets. So it's going to be really interesting to see crypto payments 2.0 if this is another example of a move towards stablecoins and away from the native assets of some of these networks. All right, Jen, sorry about that. Back to you.
Don't be sorry at all. All right, we're moving into an NFT. Oh, so Canadian of you.
Say it. Say sorry.
Sorry.
Yes, got it. All right, thank you.
It's like bagel.
All right. Okay, we're gonna go down a dark path right now. All right, it seems like the appetite for NFT video moments are continuing to grow. So Jam, I think that's how it's pronounced, a comedian-focused NFT marketplace, is putting video highlights of stand-up sets on the Flow blockchain, and Dapper Labs has signed a multi-year partnership with Kevin Durant's Boardroom. So for those of you who don't know what Boardroom is, it's a sports media company created by the NBA star. This partnership would involve KD as a creative director of sorts when it comes to NBA Top Shots. So maybe there will be a KD collection. It wasn't quite clear, but this pointed to, we've been talking a lot about traditional art in the NFT space. We've been talking about these fun characters, CryptoPunks, and we haven't spoken about video moments for a while, and it feels like they're having a little bit of a comeback. So, Will, I'm going to pass it off to you. What do you make of these? First, let's talk about the comedy moments, and then we'll move into KD.
Speed round, Will. What do you got?
I got nothing to say on the comedy moments. I'll talk about the NFTs.
Let's just go to Katie.
This is sports desk time. That's all we have time for. I'm sorry. Interesting to see him get involved. Actually, not really surprising. NBA players are going to get their cut of money. This is his likeness, his impersonation, and technically his moves on court that are put into an NFT package and sold to fans. So it's not surprising to see that he is moving into that in a more streamlined way. The interesting thing to me is that we are seeing this continued adoption of NFTs months after the first spike in February and March, where we saw NBA Top Shot really cooking in the volumes. Now we've had like this second bubble in September, and it seems in October it's not really slowing down a whole lot. So I expect to see more of these kind of going forward, especially as the NBA season starts up here in about a week, which is pretty rad. Zach, I'll throw it down to you.
All right, I'll take Comedy Top Shot. I think Comedy Top Shot on Flow is actually pretty funny. The idea that we're going to do the NBA Top Shot vibe, but for like your favorite stand-up comedian like Hannibal Buress, Maria Bamford, I think that's actually kind of clever, and I'd be curious to see if there's like a diehard fan base for that, because there's a lot of comedy people out there who really like watching stand-up, and I could see that clicking with that community, so I'm curious to watch how that one unfolds, but that's all I got on Comedy Top Shot.
I just want to say, so Jam raised $3.5 million, and the comedy show is called Non-Fungible Jokin'. And when I read that, I was like, I'd give them all my money. Non-Fungible Jokin'.
Really? That's the best they got, and you give them your money.
Yeah,
Okay.
Jen,
I got some tokens to sell you if that's the case.
All right, end of speed round. I agree with Zach. It's kind of interesting to see, comedy be added to the blockchain. It's kind of the next iteration of NFTs. So I'll be keeping an eye on what the next thing is. But Zach, I'm going to throw it to you for wrap.
Comedy Desk. We're going to do a Comedy Desk feature going forward. Rip to the sports desk. Comedy Desk only from here out, gang. All right, that's it. We're wrapping. It was the hash. We're going to do it again tomorrow. We got to get going. So thanks for tuning in. I'm Zach. We got Will. We got Naomi. We got Jen. We'll see you tomorrow, and we hope you have a great one. Thanks so much.
Bye.
Bye.
See ya.